Hi everyone, and Dr. Yusuf. We are from Group 9, and today we are presenting our financial management analysis on KLCC Property Holding BERHAD. Here is our team of analysis for this project. By the way, my name is Jafar Anak Perempuan Chuan, metric number H24A3331, and I will take over for this slide. Looking at KLCC fire evolution. First, from 2021 to 2023, the company showed great strength. They had solid liquidity and high profit, thanks to premium assets like the Petronas Twin Towers. Next, for 2024 to 2025, there was a calculated risk where the debt score dropped into the gray zone. But this was just due to short-term debt used to buy the rest of Surya KLCC, so it's a strategic move, not a business fail. Finally, the 2026 forecast, we expect a golden horizon, where revenue hit RM 2.5 billion, driven by deep restructuring and tourism recovery.
My name is Dong Xue and my metric number is H24A3585. Today, I will present the foundation of KLCC Property Holding BERHAD. KLCC is Malaysia's leading property investment group, owning iconic assets Petronas Twin Tower, Surya KLCC, and Mandarin Retail Colombo. This premier asset from East Coast Ranger. Its business model focuses on high-value property investment and logistic hospitality, with stable retail income for premier tenants. This brings considerable cash flow and strong market positioning. And our analysis objective is to see how KLCC maintain financial resilience and market changes and use debit strategically for suitable growth. Thank you.
Hello, my name is Iliana Nelvira Kelibasa and my metric number is H24A3631. Today I will present the company liquidity resilient and strategic capital deployment from 2021 and 2025. In 2021 and 2022, the company had a strong liquidity position. The current ratio and Q ratio were above 3:1, while the cash ratio was above 300. This means the company had enough cash to pay its short-term liability during the pandemic. In 2023, all ratios decreased. The current ratio and quick ratio become 0.95 to 1 and the cash ratio decreased to 87.77%. This happened because the company used its cash for business expansion and investment. In 2024 and 2025, the liquidity position improved again and became more stable. Overall, the company managed its liquidity well by staying financially strong during the pandemic and investing for future growth. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Umi Natasha binti Zamri and my metric number is H24A3473. So today, I will present the company's profitability performance from 2021 to 2025. Based on the graph, the company shows a strong and consistent increase in profitability, reaching an impressive margin of 73.74% in 2025. Firstly, the return on equity or ROE increased from 3.55% in 2021 to 9.05% in 2025. This shows that the company is becoming more effective in generating profit for shareholders. Secondly, the return on asset or ROA reached 9.04% in 2025, indicating efficient use of the company asset to generate return. In addition, the company recorded RM 1.28 billion net profit from RM 1.73 billion revenue, showing very strong financial performance. However, part of this growth was supported by property revaluation gains, which are unrealized accounting gains. In conclusion, The company demonstrates strong profitability and sustainable financial growth over the 5-year period. Thank you.
The Altman Z score is used to measure a company's financial and risk level. A score above 3 shows a safe financial position, while a score between 1.81 and 2.99 is considered the green zone. Based on the slide, the company maintained a stable score around 3.0 from 2021 until 2023, which reflects a strong liquidity and good financial management. However, in 2024, the score dropped sharply to 2.02, indicating moderate financial risk and causing the company to enter the gray zone. 2025, the score slightly improved to 2.04, showing early signs of stabilization. The decline was mainly influenced by changes in capital structure rather than weak operation. Overall, the company is still financially stable, but management need to carefully monitor and manage financial risk moving forward.
Assalamualaikum, my name is Nur Aisa binti Muhammad Jair, number metric H24A3272. Here we did constructing the distress metric which tracks the KLCC Property Holding Berhad's company financial health from 2021 to 2025. The score is based on 5 variables: working capital, retained earnings, EBIT, equity to liabilities, and sales to assets. Overall, the score range between 2.0 and 3.0, showing moderate stability. On the positive side, retained earnings doubled from 1.7% to 3.5%. EBIT rose from 4.4% to 5.6%. And sale efficiency reached 9%. These trends highlight stronger operation and reinvestment. However, equity to liabilities dropped sharply in 2024 due to expansion and acquisition costs. This temporarily weakened the Z score. In short, operation remained resilient, but leverage must be carefully managed moving forward. Thank you.
Hi, my name is Nur Intan Shazwana binti Norazlan. My metric number is H24A3109. Today, I will present KLCCP's 2026 horizon, path to RM 2.5 billion revenue. KLCCP aims to increase its revenue from RM 1.74 billion in 2025 to RM 2.5 billion in 2026 through 3 main drivers. First, tourism resurgence, where the recovery of tourism is expected to increase hotel occupancy and revenue, especially at Mandarin Oriental. Second, retail vigor, where stronger consumer spending at Suria KLCC will boost tenant sales and rental income. Third, base stability, where stable occupancy rates in premium office building provide consistent rental revenue. In conclusion, these 3 drivers will help KLCCP achieve its revenue target while maintaining its strong market position. Thank you.
This slide shows our 2026 financial forecast. We expect revenue of 2.5 billion ringgit and an operating profit of 1.547 billion ringgit, showing strong business performance. We also expected 666.5 million ringgit from the increase in property value. As a result, our forecasted net profit is 1.5 billion ringgit. For our KPI, the net profit margin is 58%, which means the company keeps 58 ringgit profit from every 100 ringgit earned. The interest coverage ratio is 6.09 times, showing that the company can comfortably pay its interest expenses. Overall, the company is expected to achieve strong growth, good profitability, and stable financial performance in 2026. Thank you.
Hi, my name is Arni Kisina binti Halim. My metric number is H24A3168. So, looking ahead to 2026 and beyond, the company is facing 2 key challenges. The first is the leverage imbalance, where the company is relying too much on short-term and high-interest obligation. To solve this issue, the company plans to refinance through long-term sukuk financings. This helps improve liquidity and creates better financial stability in the long run. The second challenge is maintaining premium yields. In order to justify higher rental rates, the company must continuously provide high-quality services and well-maintained properties. This is why retained earnings will be invested into property upgrades and workforce enhancement to improve tenants' experience and strengthen the company's competitive advantage. Overall, this blueprint shows that while expansions come with risks and trade-offs, strategic financial management and continuous quality improvement will help KLCC Property remain a leader in the Malaysian real estate industry.
My name is Holai Kwan. My metric number is H24A3724. So after listening to all our group members' presentations, it shows that what KLCC Property Holdings BERHAD has done over this 5 years. First, it shows that the company really has a good plan. From what we can see in the 5-year data, the company does not take in debt because of no choice, but it used the debt on purpose to run the business. Moreover, the company has maintained a strong balance sheet. It gives good returns to shareholders to make sure the finance is always stay in safe zone. This is what shows in our slide, which is Fortress Balance Sheet. Before we end, we want to say that our analysis is from official financial statement, which is real data, and we didn't add any personal opinions. That's all from Group 9. Thank you.